Weakness continues for the market as we've been pointing out. We're at the low point of trade for the Nifty right now, down 127 points. The sensex is down 500 points, and this sudden sharp sell-off is on account of a couple of factors. One, the heavyweights aren't doing too well for the index. We have Reliance, which has moved to the low point of trade. It's been a weak week for that stock, down about 2.5% for the week. Axis Bank is the other one which has moved to the low point, and IT stocks aren't helping either. Wipro, for instance, has now moved lower. The IT index itself has entirely moved lower. The other factor is that the broader markets also are now taking a turn for the worse. If you just take a look at the advanced decline chart, all through the day we had the advancing line ahead of the red line, which is the declining line. But just in the last few minutes, we've seen those lines crisscross, and we have more stocks which are declining. 1,500 stocks on the red side, as against 1,300 stocks on the green side. As you see, there has been an intersection, and the red line has moved higher. It is also weekly options expiry, so just keep an eye out on a couple of options. The options that are extremely active right now. Earlier it was the 17,400, 17,350 calls, but right now with this decline, 17,350 call comes into the picture. A lot of those writers believe that levels upwards of 17,360, closing in on the 200-day moving average of 17,392, will face stiff resistance for today. And at the lower levels, the only support that bulls are hoping for is the Monday low of 17,255. Why do I say that? Because the 17,300 put is seeing some writing. 84 lakh shares added in open interest for a premium of about 10 odd rupees, and we're seeing some writing at the 17,250 put as well. But it's a long way to expiry, so let's see where it goes. Things can move around, but so far, right now, the momentum firmly in favor of the bears.
Okay, firmly in favor of the bears. Seems like that. Well, let's get you some opinion as well. Rahul Sharma of Equity99 Advisors joins in for a technical check on the market. Rahul, thanks for being with us. There was that one hope rally that we saw yesterday, but I guess it flattered to deceive. Tell us a little bit about what the expectation is over the next few days. Do you think the market will resume its downtrend, and what are the stocks to look at?
Yes, good afternoon, Sonia. See, I think very rightly said, what we saw yesterday was a really good session, and we thought that the momentum should continue further. But after those 9 red candles on daily charts, one green candle, which we saw yesterday, has been completely fizzling out at this current session. The market, Nifty particularly, is very near the support levels of 17,300, or on the downside further 17,250 on the immediate basis. And on the upside, I think very rightly said by Mangalam that 17,360 followed by 17,425 or 17,500 levels are really difficult to see right now for the market. Bank Nifty too is increasing the pressure right now, and I believe that the resistances will be really challenging for Bank Nifty, which are placed at 40,700 and 40,900 levels. On the downside, I still believe that 40,400 should stick up and show us as a support, followed by 40,200.
Okay, and what about individual stocks? Anything that catches your eye as a trade over the next couple of hours?
Yes, definitely. See, there is stock-specific action going on in the market, and one should stick up to the stock-specific and follow strict stop-loss level, because I think this type of market is not a good or funny for any funny play. So I think stock-specific. My selection first will be Voltas, which is trading at 915 level. See that this stock has come in focus from the market since the heat wave news have come up. On technical charts too, stock is giving breakout on daily charts. Although the stock has already given good rally from 750 levels to 900. But I believe there is more potential remaining in coming days. So I think this stock may continue this momentum. Target price will be 950 to 960, keeping a stop loss of 900 in Voltas. Second selection is Vidhani, which for which the target price has kept at 220 and stop loss level at 125. It looks really attractive on the charts.
All right, Rahul, wanted your thoughts on two stocks. One is Reliance, which is now down almost 19% from the highs. Are we likely to see any support in the near term? The other one is ICICI Bank as well. I mean, it was one of the stars of the last year or so, and now it's corrected about 11% from the highs, not too far away from its 52-week high. But again, we have seen a bit of a dip. Reliance and ICICI Bank.
Yes, definitely, Nigel. Mangalam. See, this particular Reliance was taking support from the levels of 28,300. But then from last 3 sessions, what we have seen, this pressure is going more. And I think this 2,300 level should act like a strong support levels for Reliance specifically. If it takes this support, then I think you may see some bounce back coming in shortly. But if at all we crosses or close below 2300 levels for Reliance, I think this will build up more pressure in market, which can lead this stock to 2200 levels. And speaking about ICICI Bank, see, I was really bullish on ICICI Bank and Axis Bank, but today, Axis Bank is fizzling out a lot. Although this ICICI Bank has been maintaining its 200 demo on the daily charts, which is currently priced at 845 levels, which will act as support. And I think on the upside, this 872 or 870 levels will act as resistance. And on above it, I think this stock may go up to 900 levels.
All right. Thanks a lot for joining in and have a great day, Rahul. That's Equity99 Advisors. Let's slip into a quick break. On our special segment on the other side, Midcap Spotlight, we'll focus on macro tech developers and all the updates on that front. Stay tuned.